Hello, stock traders and investors. My name is JC De Guzman of Equilyst Analytics. I offer stock market consultancy services. This is where I can help you learn how to preserve your capital, protect your gains, and prevent unbearable losses trading and investing in the Philippine stock market. In this video, I'll share with you my technical analysis for the 5 stocks that got the most viewed disclosures as of June 11, 2023. I'm looking at the front page of edge.pse.com.ph. It's on the lower right hand corner, and we have these 5 stocks to talk about. We have Ali, Sun, VUL, Semirara, and EEI. Let's take a look at Ayala Land first. Ali closed on Friday, June 9 at 24.85, 24 pesos and 85 centavos per share, down by 3.68%. Now, using horizontal lines, the traditional way of plotting support and resistance levels, I'm looking at, oh, by the way, last Friday, Ali just broke below its previous support level near 26 pesos per share, which is now acting as its immediate resistance. So the newest immediate support is pegged near 22.6. And just in case Ali decides to regain its position back to where it was last Friday, we're going to look at 29 pesos per share as the next resistance level as a precursor to 26. Okay. All right. So those are the support and resistance levels for Ayala Land. Now let's talk about the volume. By the way, here at Equilyst Analytics, I am giving weight percentage whenever I do technical analysis on the volume, on the trade and volume distribution, and market sentiment using the historical broker transactions on a particular stock. So let's talk about the volume. So last Friday, Ali registered a red candlestick, and it was matched with a red volume bar that is higher than 100% of Ali's 10-day volume average. To me, that means there was really a strong appetite to let go of some significant amount of shares last Friday due to that relatively huge volume that was that crossed the 100% level of Ali's 10-day volume average. In fact, even the foreign investors agreed with that bearish sentiment as they registered a net foreign selling worth almost 290 million pesos. As a matter of factly, that's their overall sentiment, not just month to date, but year to date. Okay, let's change the time frame of this chart from daily to monthly so we can take a look at the summary of the net foreign on a monthly basis. So starting at January, it was a net foreign selling worth 492 million pesos. In February, it was a measly net foreign buying worth almost 5 million pesos. For March, it was a net foreign selling worth almost 275 million pesos. And then the following 2 months, April and May, they were net foreign buying, but those 2 net foreign buying months were not enough to outnumber the net foreign selling registered to the previous months in 2023. And now for June month to date, we are at 290 million pesos worth of net foreign selling. Now going back to the daily chart, now let's take a look at the moving average convergence divergence. I'm seeing a bearish divergence between the MACD and the signal lines, and that means MACD is also seconding the motion of the bearish signals that we just saw on the previous histograms. Now, based on the risk level of Ali according to its 10-day historical volatility, I would still mark this chart or mark this stock as a low risk stock, but it doesn't mean that you can buy it right away without satisfying some criteria of for a stock to become viable according to your methodology for a viable and a non-viable stock. Now, according to my evergreen strategy, it's a proprietary strategy that I formulated myself, that I authored it. According to my evergreen strategy, there is no buy signal yet for Ayala Land. Simply because many of the indicators that form my evergreen strategy are bearish. Now, let me show you the my trade and volume distribution analysis for Ayala Land. All right, so it's a bearish dominant range index. So this dominant range index represents the overall rating or overall reading of my trade and volume distribution analysis for a particular stock. It's a bearish one. Now let's take a look at the market sentiment index for Friday. It's a bullish one, so it's acting in contrary to what the other indicators are saying about Ayala Land. Possibly because some traders are considering this dip as an opportunity to lower their average price or average cost on Ayala Land. I'm not going to contradict your sentiment or decision on that as long as your buy case is intact. When I say buy case, it's a collection of data-oriented reasons as to why you bought the stock in the first place, be it about fundamental analysis, technical analysis, or a combination of both. What's important here is that you are making or you are executing a buying or selling decision according to data-driven basis. So that's the important thing here. I'll be concerned. I'll be very concerned if you are making a buying or selling decision just because of instinct, without basing it on any data-driven analysis. Okay. Now, what if you already have a position on Ayala Land? What you're going to do next? If your trailing stop is still intact, my recommendation is to hold your position. Now, if Ayala Land registers a bearish dominant range index or a bearish market sentiment index, either or both, for the next 3 consecutive trading days, then my recommendation is to consider preempting your trailing stop. Preempting your trailing stop or reducing the percentage of risk applied on your trailing stop. If this recommendation is something new to you, then the avenue for me to elaborate it is through the stock market consultancy services of Equilyst Analytics. You can see the packages right here. For the gold package, we're going to have an exclusive 3-hour online training. I'm going to teach you my evergreen strategy so that you can appreciate the principles behind it, so that you can execute things on your own as well. Okay. Now, if you don't have Ayala Land, my recommendation is to stay on the sidelines and wait for a confirmed buy signal to be issued by my evergreen strategy if you are one of my clients, and base it on your own strategy if you have your own, if you have one. Okay. So that's my recommendation according to my evergreen strategy in trading and investing in the Philippine stock market. Let me just emphasize right here, why is the dominant range index bearish for Ayala Land? One obvious reason: the dominant range, which is a collection of price points that got the biggest volume and the highest number of trades. That dominant range is closer to the intraday low than the intraday high. The price at the very bottom, 24.85, is the intraday low. The price at 26.05 is the intraday high. So when the dominant range is closer to the intraday low than the intraday high, then that means overall, traders and investors did not see a compelling reason to push the price at a higher level. Okay, I think that's self-explanatory. Okay, so for me, this gives me a data-oriented reminder to err on the side of caution. All right, enough for Ali. Let's talk about SUN. Suntrust Resort Holdings closed on Friday at 0.97. Support is near 0.84. Resistance is near 1.11. Okay, 1.11, but you can also consider 1 peso per share as the resistance level, as well as a precursor to 1.11. Volume was pretty significant in favor of the green candlestick, although the body of the candlestick is closer to the lower tail end or tick of the entire candlestick. Still, the green volume bar went above the 100% of Sun's 10-day volume average, and for me that's a bullish indicator. But mind you, in my methodology, I am not basing my decision on a single indicator alone. It's a consolidation of 6 different indicators measuring different things. Okay, so I don't make a decision based on the reading of a single or a standalone indicator. MACD is also bullish. It's traversing above the signal line. Risk level is pretty high already. It's already high. The 10-day historical level is already at 73% almost. So it already enters the high risk level according to my own way of interpreting the scores on the 10-day historical volatility. Meaning to say, this is no longer a newbie friendly stock, and that means you shouldn't be surprised if you're going to see some gaps up or gaps down, or some gaps in general, or some towering or engulfing candlesticks to be registered sooner or later on Sun's daily chart. And that's very evident. I'm seeing several actually engulfing candlesticks. When I say engulfing candlestick, mean to say there's one candlestick that eats up the entire height of the previous candlestick. The previous candlestick. So for example, let me show you an example. This one, April 11, the candlestick last April 11 is an engulfing candlestick, as it engulfs the height of the candlestick last April 4, last April 3, last April March 31, and so on and so forth. Okay, and those are the engulfing candlesticks. I don't see several gaps, not as much as these engulfing candlesticks, and that contributes as well. Those engulfing candlesticks contribute to the relatively high 10-day historical volatility score. So that's my clue. That's my go-to indicator whenever I want to look for some relatively newbie-friendly stocks. As far as the erraticity, how erratic does the price fluctuate? Okay, as far as that is concerned. All right, now let's take a look at Sun's dominant range index, or in other words, the price volume distribution analysis for Sun. It's a bearish dominant range index for Sun. You know the reason why. The dominant range, or the price points that got the biggest volume and the highest number of trades, is parked closer to the intraday low than the intraday high. Now for the market sentiment index, this is as of Friday, again as of Friday, June 9, it's bullish. It's acting in contrary to the dominant range index. So what does it mean? What should you do now? Again, let's create some scenarios. If you already have Suntrust in your portfolio and your trailing stop is still intact, you have a data-driven reason to hold your position, since the market sentiment index last Friday is still bullish despite the contrarian rating that came from the dominant range index, which is bearish. Now, it's a different story and a different recommendation if you're going to ask me what on earth a trailing stop is. Then that means one thing: you don't have a risk management plan in place. More likely, your tactic here is to just keep on buying the dips, do peso cost averaging until such time that you realize that you really can't make your average cost catch up with the prevailing or current price of the stock unless you have at least 1 billion pesos worth of buying power exclusively for Suntrust alone. That's the hard truth about keeping on buying the dips in hopes of seeing your current price be leveled with the prevailing or current price of the stock. That can only happen if you have a sizable or a deep pocket to keep on buying those dips. All right. Now, if you don't have Suntrust, my recommendation is to stay on the sidelines as well. Wait for a confirmed buy signal to be issued by my evergreen strategy if you're my client, or by your own strategy if you have your own. And as soon as your strategy or methodology issues a confirmed buy signal, my recommendation is to compute for your initial trailing stop as well as your reward to risk ratio. Once your reward to risk ratio is very satisfying to your eyes, meaning you're happy with your reward to risk ratio, then that's the time that you should do a test buy within the prevailing dominant range of the stock so you can maximize your potential profit. Now, if you have no idea how to calculate your reward to risk ratio or your initial trailing stop, you are more than welcome then to use my calculators on my website. Go to equilyst.com/calculators and you can use the reward to risk ratio calculator and my trailing stop calculator. They are next to each other. Okay? All right, so next we have VUL. Okay, VUL closed on Friday at 1.24. Give me a few seconds while I'm plotting the support and resistance levels for this stop. All right, so the immediate support is near 1.06. You can say it's near 1 peso per share if you're going to drag it at the very bottom at on that level, okay? 1 to 1.02 as the support level, and the resistance is pegged near 1.42. Now, how's the risk level of VUL? Oh, it's already high due to the 10-day historical volatility score of 82%. Why? What could be the reason? I'm seeing some engulfing candlesticks for the past 10 trading days. The candlestick for May 30 being one. And that contributed a lot to the high erraticity level or high erraticity score for VUL as far as its 10-day historical volatility is concerned. Volume-wise, it's a green volume bar supporting the green candlestick last Friday. And for VUL holders, what you would like to hear from me is that the green volume bar is higher than the 100% of VUL's 10-day volume average. That is bullish. The stock is also trading above its 10-day simple moving average, which means it's bullish in the short term. Now, MACD is also bullish as it moves higher than above the signal line. In fact, last Friday, VUL registered a golden cross above the signal line. Let's take a look at the volume and trade distribution for Ali. Oh, by the way, it seems that the candlestick that I read, it wasn't for June 9. I stand corrected. I immediately presumed that it was traded last Friday, but the candlestick that we're seeing right here is not for June 9, but for June 1, 2023. Okay, how did I know? Because when I tried to generate the time and sales data for VUL for Friday, nothing appeared. So that already hinted me, it seems that the candlestick was not for June 9, and it was so. Okay, but the good thing is that we can still generate some market sentiment rating. Let's take a look at from June 1 to June 9. Okay, the month to date. Let's take a look at the month to date market sentiment rating for VUL. Okay, it's a bearish one. All right. So, what's my recommendation now for VUL? If you have a position in VUL, I'm sure this is what you're seeing right now gives you hope. But I'm hoping that hope is anchored to the fact that your trailing stop is still intact. Because if you continued to hold your position despite that the current price is already much lower than the dip that you can only realistically tolerate, risk tolerance level wise, then that's a silly way of trading or investing in the stock market. You need to discipline yourself when it comes to adhering to your risk tolerance level, because what's the worth of calculating your reward to risk ratio, your exit plan, if you're going to violate it, if you're going to disrespect it, if you're going to unfollow it or not follow it. Okay, all those arithmetics have gone in vain if you're not going to stick with your plan. You can revise your plan, but the bottom line here is that if you're going to revise your plan just because you would like to deviate from it, you would like to you're going to what do you call this? Intentionally deviate from it by doing some workaround calculations, then that's not the right way to do it. Okay? Now, if you already have VUL and if your trailing stop is intact, my recommendation is to hold your position. Don't top up yet because not all indicators are bullish for VUL. Be on a wait and see mode. Enjoy seeing the stock inching closer to 1.42. But do that if and only if your trailing stop is intact. Don't forget to do an upward adjustment on your trailing stop every time the price registers a price higher than the previous basis in calculating your trailing stop. Okay? If these recommendations sound alien to you, then my recommendation is to consider subscribing to my stock market consultancy service, particularly the gold package, so you will get the opportunity to be mentored by me for 3 hours straight. It's an exclusive mentoring session via Zoom online I'm going to teach you the entirety of my evergreen strategy in trading and investing, when trading or investing in the Philippine stock market. Now, if you don't have VUL, don't hurry. At this point, as far as the support and resistance band is concerned, I would say that the potential reward is already slimmer than your potential risk. In other words, the potential risk is much bigger. It's already bigger than your potential profit here. As far as the proximity of the last price to the immediate support and resistance is concerned. Okay, notice this. When you go to the calculators tab and calculate your reward to risk ratio, you will see here that you need to input your resistance, the resistance level of the stock. So you also need to develop your skills in identifying or plotting the support and resistance levels of a stock, either by using horizontal lines, Fibonacci, simple moving averages, or the exponential moving averages, Bollinger Bands, whatever you'd like to use. Okay, let's talk about the next stock. We have Semirara. SCC closed. Let me make sure now that this is a candlestick for June 9. Oh yeah, as of June 9, Semirara closed at 28.25. The price did not change when compared to the previous trading day's closing price. The immediate support is near 26.94. The immediate resistance is at 29.2. And if we're going to identify higher resistance levels, we see 32.7 followed by 36 pesos per share. Now, let's say, what if it breaks below 26.94 or 27 pesos per share, that support level? Then we're looking at 20.6 as the next support level. Or we can also identify some midterm support levels right here at 23.5. Okay, so these are the support and resistance levels. Support 1, 2, 3, resistance 1, 2, and 3 for Semirara using horizontal lines. As of Friday, let's see, is the last price closing below or above the moving average? 28.8. 10-day simple moving average is at 28.28. 28.28. It's trading below the 10-day simple moving average, so that's bearish for me. But it's a green candlestick. Unfortunately, even the volume bar last Friday was less than 50% of SCC's 10-day volume average. That's another bearish indicator, despite the green color of the last volume bar and the last candlestick. Okay, MACD is bullish. There's not much support that we can expect from the foreign investors because they also have a selling sentiment for this mining company. Risk level wise, it has a low erraticity level, meaning to say there were no engulfing candlesticks, no alarming engulfing candlesticks, and no alarming gaps were spotted, at least for the past 10 trading days. That's why the 10-day historical volatility score is still at 25%. Now, for the trade and volume distribution analysis, that's what I'm doing right now. So give me a few seconds as I generate the statistics and the chart as well. My guess was right. It was bullish because why? Why was my guess correct? Because when we generated the chart, I saw that the dominant range was closer to the intraday high than the intraday low. Right. Now let's take a look at the market sentiment index. It's bullish as well. Why? Because more than half, about 52% of all participants registered a higher buying average than selling average. And more than 60% of the trade participants registered a positive net amount. So those things contributed to the making of the bullish market sentiment index rating or score for Semirara. This is as of June 9 only, okay, not month to date. Okay, let me correct that one. All right, so what should be done here? Remember, I mentioned the two bearish indicators a while back. One is relative to the position of the last price to the position of the 10-day simple moving average, and the other one is relative to the size of the volume bar in connection to SCC's 10-day volume average. So no buy signal yet for Semirara. If you have a position on this mining company and your trailing stop is intact, then you still have some data-driven basis as to why it is still relatively safe and logical to hold your position. Just don't waste your buying power by not topping up. Okay, don't top up yet. Cash is king for Semirara for now. When I say cash is king, it doesn't mean you're going to sell it prematurely. Okay, so let's put everything within the context, the right context. Now, if you don't have Semirara, and if you're really interested, really interested in trading Semirara, my advice that if you still have some remaining slots on your watch list, you can add it into your watch list, but don't add it yet into your portfolio. Add it into your watch list for monitoring purposes only. Okay, as long as the stock. Okay, here's my selection criteria for my stock screening criteria. As long as the stock has at least 5 million pesos of total turnover value for the past 5 to 10 trading days, then it's worth it to add it into your watch list, as long as you still have some remaining slots. For me, I only maintain 5 stocks in my watch list, because even though I have four eyes, okay, the number of stocks that I can realistically monitor without getting my eyes crossed, is up to 5 stocks. Okay, regardless of how many monitors I have, regardless of what size the monitors has. Okay. All right. Now, what's the next one? So for the last one, we have EEI. Okay, EEI closed on Friday at 5.30. I'm more comfortable plotting the support and resistance levels for EEI using Fibonacci retracement due to the gap registered last April 20, between April 24 and 25. So let me do that. Okay. Anyway, had I plotted the support using the traditional horizontal lines, it would still end up right here, which is confluent with the 38.2% retracement of the up Fibonacci, and that is at 4.7 or 4.7 to be exact. And there's also a midterm support at 5.2, confluent or aligned with the 23.6% retracement of the Fibonacci. Resistance is obviously at 6 pesos per share. 6 pesos per share. Volume wise, see this. I have to zoom in a lot just to see if the last volume bar is higher than the 50%, at least 50% of EEI's 10-day volume average. So volume is at 224,000. The 10-day volume average is at 478,000. So half of that is 230. Oh no, the last volume bar is less than the 50% of EEI's 10-day volume average. So for me, this means this Green candlestick last Friday is less likely to be followed up with another green candlestick, but that's just a probability, not a certainty. Okay, don't quote me for saying that I guaranteed that EEI will not register another green candlestick by the next trading day on Tuesday, being Monday as a holiday, June 12. Okay, we're talking about probabilities here, not guarantees, not certainties. Okay, so with that alone, based on the volume and add to the fact that the last candlestick is trading below the 10-day simple moving average, I would say that the price is more likely to draw closer to 5.2 by the next trading day. And MACD is also bearish. I'm seeing a bearish divergence between the signal line and the MACD line. Risk level, it remains low, but again, it doesn't mean you should buy the stock blindly, because you already know why. I already told you so. Now let's take a look at the trade and volume distribution for EEI. It's a bearish dominant range index. It's a bearish one. What made it bearish? Aside from the longest price bar with the biggest volume and highest number of trades being closer to the intraday low than intraday high, what else? It's because, I think that's the basic reason there. This bar right here being closer to the intraday low than the intraday high. So what do you think is the market sentiment index for EEI as of Friday? Is it going to be bearish or bullish? What do you think? Make some guess. Tell me in the comment section. Okay, it's bearish as well. Bearish as well. Alright, so there's really no buy signal for EEI as of Friday's closing. Again, if you have a position on EEI and I'm hoping your trailing stop is still intact, since the dominant range index and the market sentiment index are both bearish, my recommendation is to do two things. It's either you preempt your trailing stop, meaning to say you sell partially or as a whole. If you can't do that, if you can stomach doing that, then you should consider reducing the percentage of risk applied on your trailing stop. On my trailing stop calculator, let me show you that so you can picture it. On my trailing stop calculator, there's a field here that will ask you for the percentage of risk that you can apply, whether you are a short-term trader or a long-term investor. Okay, and then that will tell you if it's already time for you to sell partially or wholly all your shares for EEI. Now, obviously, I'm not going to recommend doing a test buy on EEI if you don't have a position yet. Then that's a much better position than doing a test buy on EEI for now. Okay, for now. So my data-driven sentiments will change when our data change. Okay, but that's all for now. All right, so I have just shared with you my technical analysis, trade and volume distribution analysis, my market sentiment index analysis for the 5 stocks that got the most viewed disclosures as of June 11. And again, if you're looking for an exclusive training, a mentor that can help you learn how to preserve your capital, protect your gains, and prevent unbearable losses, doing short-term trading and long-term investing in the Philippine stock market, then I am more than welcome to offer you my expertise. And I've been an active trader and investor in the Philippine stock market for how many years? 11 years already. Is it 11? Oh yeah, including the number of days. 11 years if we are only to consider the years that I actively traded. But if we are going to count the years that I've been um, analyzing, trading, no, not trading, analyzing and studying the Philippine stock market, then that's going to be how many years? Since 20, more than 20 years. Okay, that's going to be more than 20 years. So visit equilyst.com and read the entire page, and consider subscribing to my services. Just pick the package that suits you best. All right. So you will also find my clients' testimonials on the homepage of my website. Again, my name is JC De Guzman of Equilyst Analytics, helping you learn how to become an evergreen trader and investor who knows how to make intelligent trade and investment decision in the Philippine stock market. Thank you.